Okay. Welcome to the Naked Forex webinar, folks. I appreciate your time. Carlos is here. Moran, Colin, of course, Keller, Seb Tan, TT, Chantel, Jeremy, of course, Zul, Kola Wally. I probably totally slaughtered that. Hey, GY is here once again. And Jocelyn, J Trader. Hey, MJ just made it as well. And Dips and Forex Deviant. Okay, thanks guys for taking the time. Let's talk about the open or the positions that I've been watching. Now, my Aussie Singapore kangaroo tail on the 4-hour close. This happened last week on Thursday, and we had a live webinar then, and we watched that one go woo. It actually didn't really hit the first target until the gap opening on the first day of the trading week, which is Sunday or Monday, depending on where you're at. For most of you, it's going to be Sunday. For me, it's Monday, because I'm just a little bit ahead over here in Asia. Okay, so this one's all done for me. I actually held out hoping that it would hit this last level right here. The other one we looked at on Thursday, so that one's done for me. The other one we looked at on Thursday was this one, which was this little tail, this little almost kangaroo tail looking thing up here. There wasn't really anything magic about it. The reason why I drew a line here at 57.25 is if you go back to the daily, you can see that that's where it couldn't get beyond that. And let me show you. You go, oh, sorry. Was it the daily? No, it wasn't the daily. It wasn't the daily. It was the 1 hour. Hold on. Go back here. It's going to be right here. There it is. See this high right here on this candle? That was sort of the line in the sand. So we were looking for a candle to extend beyond that and give us a nice tail. And the webinar was during these two candles. So it didn't happen. We were hoping and hoping. It happened during these two candles. And then finally, a couple hours later, it did give us that nice extension beyond there, unable to close above it, and then it just fell like a brick. That trade also is now over. That hit all of the clear targets, which is this level right here, this one right here, and then this one all the way down here. And it actually went further than that, which is great. But that's probably not so interesting. Let's look at the trades that I'm watching right now. The trades that I'm in right now, well, the one that I'm in right now is actually this one, which is the Euro Aussie. Now, the Euro Aussie printed what we call a belt candle. The Euro Aussie will probably also give us a sell signal that I'm going to be waiting for. And that would be if it gets up to this area right here, the 1.2170 area right here. Everyone sees where we have a bounce right here. Since we've had support there and a double bottom, it's likely that when it gets up here, it's going to hold and not let it through, at least not initially. And see how this daily candle actually paused there as well. So you can see that it respected that level on the way down, and on the way up, it's likely to do that as well. The reason why I've gone long on this pair is because it's gone higher than the high of the belt candle here. So this belt candle is simply a belt. If you don't have the belt book, you can email me and I'll give it to you, right? Everyone here gets this free. But basically, a belt is a gap opening. Here's my email right here. It's walter@fxjake.com. walter@fxjake.com. This is how it works. The market closed on Friday at 117.12, and then it opened on Monday here in Australia at 116.95. So it actually opened down 17 pips lower. And then it closed up near the high. So that's a belt, okay? Now, I wanted it to, let's zoom in here so you can see. Go bullish engulfing. I'm long the Euro CAD too, says FX Deviant. Yeah, so we're totally in with the Euro. I hope it goes higher. So this little blue thin thing here shows the high of that belt candle. It actually didn't trigger the next day, but it printed a bullish enough candle that I decided to leave it in today, and it did trigger today. It's in a bit of a drawdown now, and I'm looking to take profit here. Well, actually, this is probably a really poor chart to look at. Let's go to another chart, and then we'll have actually a better look at this. So it's the Euro Aussie. Yeah, here we go. Okay. So it's the Euro Aussie here. The buy was at 1830. My stop's down below the belt at 1690, this red number. The first target's 119.30, 120.25, and then hopefully 121.70. When it gets to 121.70, I'll watch it like a hawk for a possible sell trade on the 4-hour chart. So that's what I've got going on this pair. So this one has actually triggered. It's totally in the game for me. Now, the other one is the Euro Pound. The Euro Pound here, oh, you know what? I just realized that on some of the accounts I'm trading, I didn't cancel this order. Well, this one's in too. So I just realized I'm in this trade. Okay, great. So, yeah, I know what you're talking about, MJ. MJ's talking about the Euro Aussie, so he's in the Euro Aussie too. Yeah, so this one right here, really interesting. Same sort of scenario. You have a belt trade on the Euro Pound, but it did a nasty retrace yesterday. And I generally don't like to get into a trade if it does a really, really nasty retrace. However, you'll notice that the retrace on this belt was almost identical to the retrace on the left. Look at this candle right here on the left. The low is 77.70. Then we have our belt, which of course every belt is a gap opening. And then we have another one right here where the low is 77.67. So it only went 3 pips lower. So it's just about the same as the retrace on the left. So it's a parallel sort of retrace. And you'll notice, and I've noticed, that generally speaking, these parallel retrace things happen often. For example, check out this kangaroo tail. Whoops. Check out this kangaroo tail right here. This would be one of those with the trend type kangaroo tails. If you don't know what a kangaroo tail is, you can also email me for that book too. But I think I noticed a lot of familiar traders here. So you probably have the kangaroo tail book and the belt book and the big shadow and all that stuff. If you don't, you can email me and I can give it to you. But here's an example of this sort of principle that we've seen over here on the Euro Pound in practice here on a with the trend kangaroo tail. How do we know that this kangaroo tail is with the trend? Well, it's because it's not a reversal kangaroo tail. It looks like the kangaroo tail just barely pierces our trend line that connects these highs on this downtrend here. So look to the left of this kangaroo tail. See that high right there? That high is at 81.86. Look to the right of the kangaroo tail. The high is at 81.84.9, or basically round up to 81.85. In other words, the retrace on this kangaroo tail came within 1 pip of the left leg of the kangaroo tail. This is the kangaroo tail's left. If we're like, let's pretend that we're God and we're looking down on this kangaroo tail. This would be the kangaroo's tail. This would be the kangaroo's right leg, but it's left for us looking at the kangaroo tail from this angle. And then the kangaroo tail's left leg is over here, or right, depending on whatever. Other leg is right here. And the legs are just about the same size, aren't they? You've got, the important thing here is the retrace. The retrace against the kangaroo tail is almost equal on both sides. And that's exactly what we have here, a really close retrace. So even though I generally don't like to take these trades, in fact, I did peel off this order when it retraced that much today, it's okay if you get a parallel retrace, because those are pretty good signs. Let's see if we can find another one here. Here's another one right here. This isn't really a nice kangaroo tail because the open and the close of this candle are not in the top third of the candle. But if you look here, you get a little left side of the kangaroo tail and right side. This one sags a little bit lower, so it's not perfect. But let's see if we can find another one here. Here's another one right here. You got this little kangaroo tail right here. The high on this candle, 85.99. The high on this candle, 86.04. So it's 5 pips higher. So you tend to see these things at about the same level. Here's another one right here. This isn't quite a kangaroo tail because the open and the close are not in the bottom third, but again, What's the high here? The high on the day after is 88.47, and the high on the day before the kangaroo tail is 88.43. This sort of stuff happens all the time on this pair. Why did the candles sometimes retrace so far out? It happened on the pound Swifty also. Hey, Manoj. Manoj is here. You're right, Jeremy, and that's Jeremy, right? Yeah, you're right, Jeremy, and when you see something on the euro pound, you'll see the opposite, generally speaking, on the pound Swiss, right? The euro pound and the pound Swiss are essentially mirror images. You can see here the pound Swiss did the same thing, where it had a really nasty retrace. My stop loss goes above the belt candle at 54.83. My sell stop goes at 53.39. My first target is this first zone here where these candles sort of paused at 52.80. Then I'm looking for where this bounce was at 51.70 as a target. And finally, my last target would be down here at 50.90, where these highs here and these would be expected to hold. So that's this pair right here. That's that trade. And you're right, Jeremy. You get the same thing there. The other one, of course, is the Euro Aussie. We've talked about this one, and the old the weekly on the pound Aussie, which by the way is looking better and better. The pound Aussie is this setup right here. See how this line? I like to move to a line chart to simplify things and shows me really where price is going. This market's been falling here. It broke through this 52.80 level. Why is 52.80 important? Well, because it found support back here in December 2010. And then it found support here and again. And then also right here, this would be support too, this little dip. And then over here, it found support before it broke through. Then it came back up, and then it found support here again. And then it found support here again earlier this year, back in April. And so now, when it broke through this 52.80 level, which is here on the red line, it broke through, and then it came back up, and the wicks of the candles just brushed up against it, like the old Luigi in the pizza shop brushes the pizza crust with a little bit of garlic butter. Just like that. Same sort of deal here, where we see this candle right here and this candle right here touching boom and boom, like that. And so how am I going to trade this one? Well, I want to see the market trade lower than last week's low. If that happens, I've got two really nice targets. The first target is going to be down around this area where all these candle highs are. See where these candles just stopped right there? It also happens to coincide where these candles stop. So support, resistance, resistance, support. So if it breaks this low, I'll be in this trade, and I'll be targeting this level here and this level here. You'll notice that all week it's been going up, up, and up, and now look, it's finally starting to come down, and you can see that here on the daily chart. So all week it's been moving up, and then now today we may have found that sort of exhaustion point where it's going to start moving down. Let's look at the 1 hour chart a little bit. Yeah, look at that dog. Really nice bearish candle. Takes out the previous candle. Ooh, that's pretty. And look at this. The market's come down here, and see this support and resistance level on the 1 hour chart shows up. All the support here, right? Support even held before it broke through. Came back up, broke through, then found support again, busted up, and then now it's come down, it's broken through, and now it's serving as resistance on the way down. So I would expect perhaps today or tomorrow, I'll see this trade trigger, which is really cool. Mike says that the Swiss pairs are images of the euro. Yeah, the euro Swiss obviously is being held in check by the Bank of Switzerland, but as some of you traders have been emailing me, the Euro Swiss here. This is the 4 hour Euro Swiss chart. A lot of you are waiting for the breakout here. There will be a breakout on the Euro Swiss. The banks can't hold their currencies hostage forever. Just ask the Bank of Japan on that one. Right? So this pair will eventually break out. But of course, Mike's right. Currently, the Euro and the Swiss are mirror images because Bank of Switzerland's holding this pair in check. Absolutely right. Yeah, Mike's saying that it's flat at 120 without any sign of life thanks to the effective peg of the Swiss National Bank. Exactly. Exactamente. Okay, so those are the trades that I've got on now. It's Euro Aussie, Euro Pound, Pound Swiss, the Aussie Singapore is cashed out, and then the Pound Aussie Weekly may also go. Are there any charts that anyone would like to take a look at? Any charts at all that you're interested in? The yen, okay. The Aussie, okay, cool. Let's take a look at those. Because, yeah, we talked about this the other day. The yen printed this almost kangaroo tail, but of course it wasn't a kangaroo tail because the open and the close are not inside the previous candle right here. The open and the close of this kangaroo tail are not inside the previous candle's range. So that does not count. Everyone see that, right? It could be considered sort of a double bottom type situation, but it is not a kangaroo tail. The other thing is the next candle did not trade higher. So this is looking like a saggy, perhaps we could fade this kangaroo tail and sell it if the market trades below the tail here. Oftentimes when we see kangaroo tails on significant support and resistance levels, if the market's unable to break above that kangaroo tail and instead goes where the stop loss would have been, again, my preference is for buy stops above the high here so that the market will only trigger me into the trade if the market wants to go higher. If the market instead wants to go lower, I'm not going to get in this trade, right? So I'm going to wait. If it breaks through and closes below this low here, the low on this one is 77.93. Let's say the market comes down here and closes below 77.80. Well, then I could sell this dog. I would be interested in selling this one. And where might it end up? Well, we've got a pretty significant level. If it does break that 78 level, we've got a level down here at 76.80, and we've got another one down here around 75.90 or 76 even. So that if I were interested in trading the yen, I would definitely look to sell it, because at the moment it's not respecting that kangaroo tail. You can see that this trend. You could even trend line fanatic alert. You could draw some sort of trend line here. Although you might make the case that it's starting to break out, and go above that trend line. So if I were trading this one, I'd wait for a close below there. That's what I would do. GY says, kangaroo tail, can you give me an example? Absolutely. This one right here, GY. This is the kangaroo tail. And the rules with the kangaroo tail are very specific, okay? Let me zoom in. The rules of the kangaroo tail are as follows. The open, and they're in reverse for bullish ones. This is a bearish one, obviously. The open and the close of the kangaroo tail must be in the bottom third of the candle. And that's what we have, right? Manoj, I'll answer your question in a second. The open and the close here, this is great. Thanks for bringing, keep the questions going, guys. This is awesome. You guys are, this is why I love hanging out with traders, because they're the inquisitive type. This is cool. Okay, so what makes this a kangaroo tail? Well, one, the market's got to get to a significant level of support and resistance. Why is this level up here a significant level of support and resistance? Well, let's go back on the chart and look. First of all, let's peel off all these other insignificant levels. Well, most of them. Let's get rid of the ones that are sort of out of the way. All right. The market bounced right here and found support. Okay, then the market broke through that level, and then look at how the wick of that candle touched the level, and then it fell, right? And then it came up here and it couldn't get through again. And then it came up here and it couldn't get through again. The line chart's going to really make it clear here, folks, right? Line chart really helps. And then finally it comes back here, and on the I think we were on the 4-hour, right? The 4-hour chart shows a really nice kangaroo tail here. What is a kangaroo tail? It's a candle that has a long tail like that. It extends beyond the support and resistance level. The open and the close should be in the bottom third of the candle if it's a bearish one like this one. The open, the close should also be inside the low and the high of the previous candle, which is, of course, what happened here as well. The next candle should trade lower than the low of the kangaroo tail, triggering my sell order. I didn't take this trade. I didn't see it happen. But if I did see this trade, I would have had a couple of problems with it. One is that I'll talk about that in a second. I don't want to get too tricky here. But so those are the rules of the kangaroo tail. Long tail, it's on a support and resistance level, which is a fancy way of saying a place on the chart where price has reversed in the past, right? All that support and resistance is, it's a sweet spot on the chart. It's a beer belly, if you will. It's a place on the chart where the market has repeatedly reversed. Why is it a beer belly? Because it's a zone. It's a range. It's something that's squishy. Sometimes the market will push into it. Like, looky here. See how the market pushed into this level here and then fell? And then over here, it even went even further, where the wicks went beyond it and then fell. So here it came close, and it just sort of brushed up against it and fell. And then over here, it came in and extended beyond it and then fell. So both of those would be touches on the zone. It's just, that's why I consider it a range, right? Okay, so then the next candle traded lower, and it paused right on the next support and resistance level right here, which would have been target 1, and then target 2 would have been down here, which it also hit quite easily, actually, just in a couple of candles. The stop loss goes above the high, and that's how I trade these. So that's a kangaroo tail. If you want the rules for the kangaroo tail, you're welcome to them, and all you have to do is email me and ask my, and I'll send it to you. It's also in the book Naked Forex. There's a whole chapter on kangaroo tails, and there was another chapter on special other kangaroo tails and all that sort of stuff. But I'll give you the ebook version, the Cliff Notes or cheat sheet ebook for free. So there's my email if you want it. Does that make sense, GY? Okay, cool. How about okay, cool. So, and the other thing is, the other sort of defining feature about kangaroo tails is that this idea of room to the left. This candle only has a little bit of the candle that's printed on unique space on the chart. What is unique space on the chart? It's the part of the candle that prints on the chart where other candles haven't recently printed. So it does have a little bit of unique space to the left here. See that? But a majority of the candle is actually eaten up by this candle right here. So that's not ideal. Ideally, our kangaroo tails will actually have a lot of, will extend beyond and have a lot of unique space. Let's see if I can find a good example of that. This one, this is a good one right here. See how the majority of this candle has unique space to the left. So that's kind of the thing that I like to see on these. All right, so that's the rules of the kangaroo tail. Now, we've got, Manoj says, let's look at the pound yen, because somebody wants to look at the pound yen. So that's cool. Manoj says, Walter, slightly off topic, but you said that in your early Forex stage you were consistently losing. What kept you going? Manoj, what kept me going was I have a friend who introduced me to Forex, and his name, here, I'll write it here if you want. His name is, he's the guy that said, hey, you should quit your job and trade Forex. His name's Ashkan Balor. And Ashkan Balor was interviewed, some of you may have read the book called Millionaire Traders. The book called Millionaire Traders by Kathy Lien and Boris Schlossberg. Millionaire Traders by Lien and Schlossberg. Whoops, I spelled Schlossberg wrong. That's all right. He's in chapter 10, and he's the guy that introduced me to Forex. So I knew that it was possible to trade profitably. However, I also knew that I couldn't trade like Ash traded. Ash trades the 3-minute chart, and he trades momentum type setups, and he likes to take quick profits. And I knew that, one, I couldn't trade the 3-minute chart, and I didn't like to take quick profits, and I prefer to sort of go away from the charts while my trade was in play. In other words, I like to trade the 4-hour, daily, weekly charts. I prefer to let trades unfold over weeks days, hours, rather than minutes. And so what kept me going, Manoj, and thanks for the question, was that I knew it was possible to trade profitably. Ash was trading profitably, and so I knew it was possible. I just had to figure out what was right for me. So that's what kept me going. Given the recent big down move on the Aussie yen on the 4-hour, will you have entered on the bullish engulfing candle, says Jeremy? I don't know, Jeremy. We'll take a look at that. Let's first look at the pound yen. So on the pound yen, what I would really like to see on the pound yen is I'd love to see this pair get down here to 1976. That's where I would look for some support. So if I were trading the pound yen, I would if I were trading the pound yen, I would wait for it to get down here. Now, if I were trading on like a lower time frame, wow. If I were trading on a lower time frame, this is what I would do. I would wait for the pound yen, like the 4-hour chart here. I would wait for the pound yen to break below 120.98, trade below that level. Okay, so in other words, trade below here, and then trade down in this area, then come back up and print a bearish candle on 128.98, or we'll just call it 121, right? We'll just call it 121. So I'd like to see a breakout, a close below here, see it trade down here, then come back up, touch that level. I would sell it all the way down to this level down here. That's how I would trade the pound yen. The euro Aussie looking bear. Okay. Jeremy had a question on the Aussie yen. Let's check out the Aussie yen, Jeremy. Given that the Aussie yen's been bearish on the 4 hours, would you have entered on a bullish engulfing candle? As you can see here, there is a bullish engulfing candle or a bullish big shadow off the Aussie yen. And this is a great example of what I was talking about earlier about these zones being squishy beer bellies. Sometimes your hand may brush up against a hairy beer belly and then you pull it away rather quickly. And sometimes you may actually push into a beer belly and then your hand goes into the beer belly and then it retracts. And that's kind of what we have here. We have the market pushed into the beer belly here, and then over here the market's just brushed up against the hair on the beer belly, and then it's bounced. So to answer your question, Jeremy, I didn't take this trade. It looks pretty good, but you're right. I mean, given that it's come down, I'd probably be more interested in selling this pair where it is here, or even better, right around this area. Does everyone see why this area here, 80.60, would be a good area to sell? Because if you look at the line chart, you see support back here, and then resistance recently. So that would be a really cool place. So yeah, Jeremy, I'm with you on that one. Perhaps you'll see it get to 80.60 and then give us a nice bearish signal right there. That would be good to see. Okay, so FX deviant is said the euro and the Kiwi. Oh, Mike wants to see the euro yen, and Mike asked a long time ago. So let's see the euro yen. Euro yen would be, if the euro yen, wow. Okay, this is a cool chart. This is a really cool, I love charts like this one. Thanks, Mike. If the euro yen closes, let's zoom in here. The euro yen closes above yesterday's high, but ideally, if it closes above a Monday's high, which is 95.25 on my chart, if it closes above there, I think it's going to make a run at 96.40 right here, which is where all these candles held and where this little dip right here was. So FX deviant says he's looking for euro yen long. Yeah. So I would say, and what's the problem with this candle right here? Why isn't it a kangaroo tail? Well, clearly the open and the close of this candle are not inside the previous candle's range because of that gap opening, right? The market gapped down here. So it's not a kangaroo tail. Also, the next day didn't trade higher. If I wanted to trade the euro yen, I would probably I would probably buy it if we could get a close above, ideally a close above 95.25. Yeah. And then we were talking about the Kiwi. The Kiwi here is interesting. We sold the Kiwi back here into this support level down here, and it bounced and came back up and then fell again. That trade's all over, so I'll delete all these numbers. That's an old one. Never made it to target 2 down here, obviously. Got stopped out at break even, waiting for target 2 to hit. The Kiwi could give us a really nice kangaroo tail, right? Like if this candle just closed right here, in other words, if the day were over, that would be a pretty nice looking setup to buy up to here and here. Actually, just a little bit lower, like this area, 80.30 and 79.30. Yeah, that's what I would do on the Kiwi. But again, this candle hasn't closed yet, and there's a long ways to go. We still have our New York market and all that, so not sure about that one. Oporto. I don't know Oporto. I don't eat chicken. Oporto. Okay. Euro Aussie. Okay. How do you distinguish fundamentals? Dips. I don't really. This is the extent of my fundamentals. I don't trade before the non-farm payroll, and if there's an interest rate announcement coming out, I generally don't like to take a trade like hours before the interest rate announcement. If I'm in a trade and then a couple days later the interest rate announcement for that country, that's fine, because that usually will fuel the move, right? But here's the fundamentals. The fundamentals I'm closest to are just like anyone. It's going to be your home country. So for my home country, which is Australia, I know that Australia's got some problems, right? And so if I had to guess, I'd say that the Australian dollar is going to go down. But if the Australian dollar is able to make a new high and close above this, which it hasn't yet, close above this high over here, then okay, maybe all bets are off, right? Maybe all bets are off. If it closes above 105, then I have to rethink that. But so far this year, the Australian dollars are making lower lows and lower highs. So in terms of the fundamentals, the Reserve Bank of Australia is probably going to cut interest rates. They've noted that, and the housing market, of course, is as some of you may or may not know, is overheated in Australia. It's a bit of a bubble. That's a problem. That's the number one problem for currencies. If you really want to predict what is going to happen in the currency, check out what the housing data says. That's the best predictor I've been able to find, is the housing data. Housing data is the best predictor that I've been able to find in terms of what's going to happen in the future. You can talk all you want about interest rates, but if the housing market starts to tumble, that currency pair will definitely tumble. So I keep a close tab on that. Mike says you can put all your toolbars on the same level. Yeah, you're right. What happens, Mike, is because I have these extra screens and stuff, every time I move my computer to, like if it's just a laptop, then it goes one way, and then if it's on a big screen, then it does another thing. So what happens is they get all jumbled up because I'm on different screens. That's why it does that. But thanks, I know what you're saying. I totally get you. Gotcha. GWAT says, what's the problem with Australia now? Well, the economic numbers in Australia, the consumer confidence is down. Australians are spending more on housing than they've ever spent throughout the history of Australia. And there's a huge tax that's just been levied on everyone called the carbon tax. So there's a bit of a storm brewing. Oh, and by the way, the government just announced that wait a minute, we were wrong. We thought that there was X number of people in the country and that we're short housing, but actually we miscounted by a million. So we have 1 million less people than we thought we did. So there's a lot of things sort of happening right now. And with inflation coming down, the Reserve Bank's going to have to cut rates. If the Reserve Bank cuts rates, the currency pair is going to fall, right? This currency pair, by the way, the Australian dollar, is the carry trade right now, right? That's where the world is. The world wants high interest. If the world wants to get some nice return, get some nice interest on their money, where do they go? They go to Australia. Australia's got the highest interest rates right now, the major sort of currency. So you don't go to Europe to get it. You don't go to Switzerland to get it. You don't go to U.S. or Japan, certainly not even the U.K. Right now, if you want to get returns, you go to Australia. So this is a great currency for a gauge of risk. When the world's feeling lucky, this currency pair goes up. When the world's feeling scared, this currency pair is going to go down. Years ago, it used to be the pound yen. But today, now, it's definitely the Australian dollar. Or the Aussie yen, or whatever, any Australian dollar is really the best one. Okay, Aussie Kiwi. You can get a little bit better than that, FX Deviant. I can't see anything on the Aussie Kiwi short term. Well, then don't trade it. We don't have to trade it, right? I can't see anything on the Aussie Kiwi short term. Okay, yeah. Short term, like 1 hour, is that what you're talking about? Like a 1 hour chart, or? Yeah, I can't see anything short term either, like on the 4 hour or 1 hour or anything. If I were trading this pair, and there's another question here about drawing support and resistance. Mike says, so you use multiple monitors? Yeah, well, I basically have a laptop, and then I plug it into my monitor here when I'm in the office. If I'm somewhere else, I just take my laptop with me. So I don't really have multiple monitors. I just have one monitor, which is nice for the webinar because that way you guys don't see all of your chat stuff. You can just see the chart here, right? But when I have the laptop, and then that's when my charts get a little bit messed up. If I were trading this pair, first of all, let's draw our support and resistance on this pair. This is good. Let's do an example pair. The Aussie Kiwi is a good one. So what I first do is I draw my lines at the extreme highs, extreme lows, and let's say I want to trade the daily chart. So I'll go to the weekly. I'll go one up. So if I want to trade the daily chart, I go to the weekly. I draw first I find the extreme highs and the extreme lows, and I put my levels in there. Then I look for all those spots on the chart where price has wiggled. There's a wiggle there, there's a wiggle there, right there. Okay, and then what I do is see all that resistance, support. And I look for those places where we have both support and resistance. And I don't want to draw too many. It's easy for me to draw too many. I only want to flag the major important levels where we have both support and resistance, like support and resistance. And then once I've got all these done, it's probably not critical that I do the ones all the way down here because price is so far away. But I generally will go like this. And then I'll go to my daily, and I'm just using the line chart here in MetaTrader. And then I'll just make sure, okay, did I miss any? Are there any levels here that stand out that I missed? And it looks like there's one right here, and it looks like there's one right about there that I missed. And it shows up a little bit better and there's going to be one in this area here as well. And of course there'll be one down there too. There's going to be one down here too. There, and these touches over here. And then you could probably make a case for one being right here too with this resistance and this support right there. And that's about it. Then what I have to do is wait for the market to reach those levels. Once it reaches those levels like we're at right now, see, we're right where the market found support back here in the past. So if it can give me a kangaroo tail, a bearish big shadow, anything that says sell me, then I'll do it, right? But at the moment, I just don't have that yet. Maybe when New York comes online, we see this market totally rip the other way, and then we end up with a nice kangaroo tail here. Wouldn't that be a beauty? Especially when the market runs in a parabolic uptrend. This is pretty close to a parabolic uptrend. This is what a parabolic uptrend looks like. Whoa, that was the wrong thing. It usually takes 3 trend lines to draw your parabolic uptrend. It looks like this one's only going to have maybe 2. The parabolic uptrend is defined by steepening trend lines to capture the trend, like this. See how I need two trend lines here to capture the trend? Really, it should be 3, but that's what a parabolic uptrend is. When you get a normal sort of downtrend or uptrend, you'll get a trend line will capture it like this. See how this trend line, boom, 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 it captures it like that? It holds it, the market retraces, comes back, and it falls. That's kind of a normal sort of retracing type down move. This over here is totally different because what's happening here is the market is steepening it's sharpening its up move. And there are very few red candles, especially in this upper part, and I need to have an even steeper trend line to capture that. So that parabolic uptrend is usually a pretty good sign that the market's going to fizzle rather quickly, turn around in other words. So I'd be looking for a short on this pair. FX Deviant, I can't help but want to sell the Aussie Kiwi at 31.50. Yeah, well, that's a pretty good spot too. I mean, if you look back on the chart here, 31.50 is going to coincide with what? This area right here, right? Yeah, right around here. If we go to the line chart, you could probably make a case for a zone being drawn here. I didn't draw it in here because it didn't look major, but right around this level here, where we have this reversal here, and then these touches here, these two, and then over here. So you could make a case for wanting to sell it around there. So we'll have to keep an eye on this one because it could give us something really nice. GY says the housing bubble normally will take a long time to have an impact. Well, if people start losing their jobs in Australia, then they won't be able to pay for housing because such a large chunk of their money is housing related. So it could, yeah, you're right. I mean, housing prices are like giant sort of tankers that are bringing you furniture from IKEA in Switzerland, right? You know, those things take a long time to turn around. And the housing market's been it's already in the capital cities in Australia, the prices are already down. They're down over the last year or so. So it's already turning around. It just takes some time. You're absolutely right. But let me just note, here's one more little tidbit that I learned this week. I have a student I wonder if he's here. Is Jeff here? Where's Jeff? Hey Jeff, are you here? J Trader, I'm going to show you a parabolic uptrend next. I don't know if Jeff's here. Okay. No, he's not. Okay. Well, Jeff works in the mining industry. In Australia, the mining industry is really what they say is holding this economy afloat, and why Australia isn't like the UK or the US or Spain or whatever. It's pretty good because India and China are buying all of the minerals here that are being mined out of Australia. Jeff, in the mining industry, has a mining company, and he said that there's a port in China that usually takes about 75 ships full of coal from Australia. 75 boats get into this port in China, and last month in June they took 4. So you do the math on that one. If the mining industry is holding up the Australian economy, and if China stops buying the dirt over here, then perhaps the Australian dollar will also fall. So we'll have to keep an eye on that too and see what kind of economic data comes out of China, because that's really important for Australia and the Australian dollar. Let's show you an example of a really cool parabolic uptrend. We've been watching this the last couple of days. See this one right here, folks? This is the Aussie Swiss, and this is a parabolic uptrend. Notice that on the daily. Notice that the first trend line captures the bottom part of the up move. The middle part's captured by this trend line, and the last part, or potentially it looks like this is going to be the last part, is captured by this one. So this is a parabolic up move. If you're like an engineer or something and you know what a parabolic chart looks like, and you know it follows sort of this sort of slope, this curve. It's not a line, it's a soft curve, right? That's an example of an upturn. Yeah. Yeah, so there you go, JTrader. Cool. Yeah. These can get messy, FX deviances. Yeah, absolutely. If I'm trading this one, I talked about this the other night. If I get a close below this 101.60 level, then I'll be interested in selling it. But I need to see the market close below this blue line. Because you'll see here, look at these. Look, here's a red candle that engulfed the prior one, and the market never traded lower, right here. When you get these really strong uptrends, what will happen is these sell signals will not work out. When a sell signal and a strong uptrend, the market just blows through these sell signals. That's telling you something. The trend is very, very strong, right? When you're not even getting any, like this huge bearish candle here, and the market just whoop, and then 2 days later it's back above it. So here's another one, a little tiny kangaroo tail here. Next day the market just takes it out. So that's a really example of a parabolic move. Colin says that nobody in Portugal is parting with their money. Yeah, tell me about it. So the tourists are not out in Portugal, which is a shame because they don't get to see Colin's place, which is so nice. Really nice place. Now the dogs are something different, but the people are very nice in Colin's part of the world. Aaron says, if the zones are areas and not lines, how can a close below the lower high be accurate? How can we have confidence in that? Well, Aaron, I guess the important thing is not the exact level, but what price does when it closes. So, for example, let's say that, for example, a good example is that Pound Aussie Weekly. Here's our Pound Aussie Weekly. And you might look at this red line here at 52.80 and say, well, is it really an important zone? It's a squishy zone. Look at all the line chart will show you that you've got bends here. There's a bend there. There's a bend there. There's a bend in the area here, and there's a bend there. And then we had one right there. So it looks pretty good. This red level at 52.80 looks pretty good on the Pound Aussie. Now, the market broke through here and closed below here. So I say, okay, the market's broken. So at this stage in the game, let's move it right here. Right here. Okay. So I'm going to hit the F12 key and advance it to where we're at. So at this stage in the game, I go, okay, the market's broken below 52.80. Great. But I want confirmation of that. So guess what? This candle right here, the wick of the candle touches that, and it never really gets beyond that. So that confirms to me that, yes, guess what? It did break below that, and it's respecting that. Same thing here. The candle did the next thing. It touched that level, couldn't get beyond it, and then it took out the low of that candle. So now I'm saying, okay, this market's on the way down. If the market trades below here, I'm definitely going to sell. So I put my little sell stop right here, right? And I'm ready to go. So that's kind of how I look at it, is I'm saying, yeah, it's a squishy zone here, but because the market respected it, it tells me that yeah, the market wants to trade lower. Now it looks like this week we have a really good chance of triggering this trade. MJai says, we love Portugal. We even have Fado in the UK now. Yeah, well, MJai, you should check out Colin's place in Portugal. It's pretty cool. Mike says, I think, Walter, you must have great patience in order to trade the daily and 4-hour charts. I could never do that. I'm just like your mate Ashkan, scalping on the 1 to 5 minutes, snatching a few pips profit each time and run. Aaron says, thanks for that. Very helpful. Yeah, I'm glad that it helped. Yeah, so that's kind of the important thing, I guess, Aaron, is what is the market doing in respect? Is it respecting that zone and doing what it should? What I mean by doing what it should is if it breaks lower, it should find resistance. If it breaks through a zone, it should come back and find resistance. If it breaks above a zone, it should come back down and find support, right? Mike, the only reason why I like trading the higher time frames is I don't have to pay as much commission as if I traded the 1 minute chart. I obviously pay less commission on the daily charts, 4 hour charts. The other thing is that it's easier, things move slower on the 4 hour charts, the daily charts, the weekly charts. And also, if I have a job, like if somebody here has a job and they want to trade Forex, it's a lot easier for them to manage their trades on the daily chart than it is to, do it on the 5 minute or whatever. So, yeah. Dips, I don't only trade long term. We're going to have live trading setups on the FX Street webinars, and we'll look at live setups on the lower time frame charts, like the 1 hour, 15 minute, those sorts of charts. It's just a little bit more tricky. I prefer to trade the 4 hour, the daily, the weekly, but I understand that people really like the 1 hour. What ends up happening on the lower time frames, guys, is you have to look at the big picture. Whereas if I'm looking at a daily chart, I can just look at one candle and pretty much go, okay, this one candle on the Euro Aussie is down here in Principal Belt. So that one candle tells me it's time to buy here. Whereas if I'm looking at the 15-minute chart, I got to kind of look at like all of the recent candles in a snapshot. So it just becomes a little bit more tricky. I've got to be on my game in terms of execution. All these, I pay more commission. All these things sort of add up and just make it a little bit more tricky. It's so much easier for me to get really good trading kangaroo tails on the daily chart, and then after a few years, I move down to the 1 hour, the 15-minute, and that sort of thing. But my preference would be to trade a daily chart trade and let it unfold. GY, the lowest time frame, I'd say now the lowest time frame is the 15-minute. I used to trade like the 3 and the 5 minute, but I wasn't very good at it. FX Deviant says I like the old mid-time frames from the pound yen. You shorted the pound yen at 125.25? Cool. 125.25. Oh, that's pretty good. So that would be up 125.25. That's right here. Oh, so you shorted it up here. Oh, that's pretty cool. Yeah. 5-to-1 is great. That's awesome. That is awesome. Do you let your trades run to their stops, or do you actively manage them? Aaron asks. Aaron, generally speaking, what I'll do is if a trade goes 75% against me and I see it happen, I'll go down like the 1 hour chart, and if it doesn't look good, I'll dump it. I generally will let them run and hit the stop unless I see it go 75% against me, and then I'll go, okay, if the 1 hour chart, like for example, I'll wait for Europe to open. And if Europe opens and then after a few hours it goes really badly against me, I'll usually dump it. I prefer to take just a smaller loss than a bigger loss. But I'm okay with it hitting my stop while I'm sleeping or whatever, Yeah. Hopefully that makes sense, Aaron. So what I do, Aaron, is I think if you're doing that, perhaps you might want to do some testing in Forex Tester or something like that. Get really good at managing them that way. Dip says, how do you derive targets? Well, the Euro Aussie was a great example. Why is my target at 1930 on the Euro Aussie? Well, because this is where the market held. This day it couldn't get lower, couldn't get lower there, couldn't get lower there, couldn't get lower there, closed up higher, and then finally it fell. So 4 days it couldn't get through, so that's my target 1. Target 2 is right here. Again, the line chart's going to show that. So I have support and resistance-based targets. Support here, resistance there, that's my second target. My third target, 2170, is a sort of a pie in the sky, hope that it gets there type target, and that's based on this double bottom over here. So it's simple support and resistance levels. That's where I look to take profit. Hopefully that makes sense. Yeah? Aaron, I have a friend, Aaron, a trader that I've worked with. He just got a $5 million deal to manage money. And you know how he did it? He did it by working in Forex Tester. That's how he did it. That's how he quit his job. That's how he started managing money, and that's how he just landed that deal. Because he spends more time testing in Forex Tester than just about every other trader I know. So it's up to you, Aaron. You know, I mean, if we want to quit our jobs and be pro traders, you know, we should practice. I think that's the lesson. You know, we should really practice. Yeah. Which currency do I avoid trading now? That's going to be the last question, GY. Euro Swift. Euro Swift. Hey, Mike, you got to stick to what you do, what works for you. I know traders that can't go to sleep if they have an open position. Well, that's fine. So, yeah, that's fine if you're a scalper. If you're a scalper, that's cool. That's awesome. I just think it's easier to start trading the 1 hour charts and work your way down to the 5 minute chart than it is to just open a Forex book and start trading the 5 minute chart. That's all I'm saying. It's just easier if you start where things just are a little bit slower, the higher time frames, and then work your way down. It's so much more exciting to be in the market, but you're absolutely right. Yeah, Aaron, I'm with you on that one, brother. If you can test your systems in Forex Tester, you'll have so much more confidence that you will probably be more likely to stick with your system when we're trading live. That's how it works for me. If I'm trading live, I'm only trading a system that I've traded hundreds and hundreds, if not thousands of trades in Forex Tester. I know what the win rate is. I know how I'm going to manage the exits. I know how likely it is to work out for me. Carlos Batista, what makes you decide to go out of the trade if the first objective or the second? Yeah, Mike, I agree. Mike's got a tough one. He's scalping 10 to 12 hours a day. That's tough. Carlos, what I do is I split the trade. So I take half of my trade at target 1 and then the other half at target 2. Or if I've got 3 targets, I'll hold on to a little bit more. So here's the Aussie Singapore. We had a kangaroo tail up here, up at a really nice zone. Sell was below the low. It triggered on the next candle. It didn't really hit target 1 until the open here at target 1. Then target 2 was hit. That was Monday. If you look here, you'll see Monday, the period separator is right here. So here's Monday. It hits target 1. I move myself to break even. Then it hits target 2. Then it hits target 3. And I actually held out for this target down here. My last target was at 29.21, which was hit last night. So 29.21 was my. So this was a great trade because it had. How much risk did this trade have? It was at 59, so right here. So it had 39 pips of risk, and in the end, down here, it made 136 pips of reward. So that was pretty good. Yeah. Yeah, you can do that, Carlos. You can move your stop. I like to move myself to break even, but you can ratchet your stop down below each level as it does that. Yeah, that's in the book too, in the Naked Forex book. Naked Forex is the name of the book. Yeah. I think I have to go, guys. I don't want to. I'd love to stay in chat, but I think I have to go. Thanks for your time, folks. Thanks, Aaron. Thanks, Carlos. I don't really use any indicators. Sometimes we use moving averages and things, but it's just so much more fun to trade naked. Thanks, guys. Thanks, everyone. Have a good night. See you, Keller. I think our next webinar is going to be live trading, so we'll look out for that. Thank you, Carlos. Thanks, Mirren. See you, Jeremy. Thanks, Chantel. See you, Lori. Thanks, Victoria. Bye, Dips. See you, Mike. Colin's still testing DT. Colin is deep into the Forex Tester world. That's awesome. That's awesome. Colin and Liz are Forex Tester experts now. Okay, take care, Aaron. See you, Jocelyn. Bye, J Trader. See you, Mijak. Bye, Marky. Thanks, Manoj. Thank you. Thanks, Mike. See ya. Bye, folks.